Hi friends, this is Money Breeder. Welcome to the Money Breeder. Today I am going to discuss about one interesting topic which is called daily bias. Based on the daily bias, how we are going to trade, what is the daily bias, all those things with examples I am going to explain. Before going into the details, this is the standard disclaimer. I am not a SEBI registered analyst or advisor. Okay, please do read this disclaimer before attempting any trades. Okay, coming to the topic, which is the daily bias. Okay, let's take a candle. This is the candle. For example, today's candle. Okay, you take the candle, a red candle. So what you have to do is you have to mark the previous day. This is you assume that like this is the previous day candle. Okay, if today's candle, if the today's candle close, right, if the today's candle close is like this, above this, that means what is this? This is the previous day high, PDH. This is the previous day low. You assume there is no wick and all. Okay, if the wick is there also, you find you take the previous day high or low. If today's candle, if the today's candle closes the previous day high, okay, that, or if the today's candle closes the previous day low, okay, that means there is a bias. What is that bias? Let's take an example where today's price is closed. The close price of today is previous day high, above the previous day high. Okay, that means previous day high is 19,100. Today it closed 19,120. That means this is the bullish bias. Bullish bias. Previous day close, this is the previous day high. Similarly, previous day low is 19,000. Okay, today's candle closed below the 19,000, which is 18,950. That means bearish bias. This is called bearish bias. Okay, similarly, if the candle closes between this, okay, if the candle closes between this previous day high and previous low, there is no bias, no trades. Okay, if the bullish bias, we are going to trade on the bullish side. If the bearish bias, we are going to trade on the bearish side. Okay, this is the simple concept which can be applicable for the trending market. The conditions here is which can be applicable for the trending market. The max loss will be we are going to buy the options here. Okay, selling is risk, little bit risk. That's what we avoid the selling. The limited loss, because this is the overnight position without you can have the protection also, but protection may not work here as per my back testing. Without protection we can take the position. Okay, whenever we see the bullish bias in the market, we go and buy the call option of Nifty. Okay, whenever we see the bearish bias, we go and buy the put option, or the money put option, or one strike or one or two strike in the money ITM put option also fine. Okay, to avoid the decays, you can go slide in the money like one strike overnight decay, to avoid the overnight decay. Okay, this is the simplest concept. Let me take a chart. Okay, here I cut the all the days candles just to explain you. I'm replaying it. Okay, replaying. Now if we see, right, the previous low is this one. The next day, today's candle, for example, today's candle closed on the previous day low. That means the bias is bearish bias. Okay, similarly here there is no bias. The price is not closed the below this. Okay, next day it is bearish bias, next day it is bearish bias, next day it is bearish bias. Okay, after that, see here we might have taken the position with the bearish bias, but it is not worked out, so we might have got the 2000 to 3000 loss here. Next day what happened? This is closed above the previous day high, so bullish bias. Next day we took the position in the bullish bias side. So this is how, okay, here it worked out and we took the bullish bias, but it is not worked out. Today what happened? The close price is not the low or not above the high. That means there is no bias today, so we should not take the trade for tomorrow. So let us back test this. Very simple. Okay, we are going to back test this based on the date. Okay, what is this date? Date is October 18th. Let's go to the simulator. October 19th. Okay, what I am trying to take the position here is, let's go to the 3 o'clock. Okay, 3 o'clock only we will see the clear bias. Okay, on the day 3 o'clock, okay, get the option chain. What is the price? You check the price, 19,684. That means 19,700. Go to the, what is the bias? The bias is the price closed below the previous day low, so that's what it is bias, bearish bias. What we have to do is 19,700 PE I am buying, because that is bearish bias, so I am buying the put option. Okay, once we buy the put option at 3 o'clock, just go to the next day morning 9:25 to 9:30, you have to exit the position. Okay, see, this is the one, 9:20, 9:25, 9:30, you exit this position. That's all, you are done with the trade. The max loss is 5,000 rupees. The maximum profit is unlimited, but we don't want the invested amount, right? How much we are going to invest? 50 into 116. Okay, if we go to the calculator, right, 50 into 116, which is like 5,800 we are going to invest. This is the amount we are going to lose until we hold the position till expiry. Since this is the buy position, we don't want to hold till evening because of the decay and market fluctuations. If that market reverses, immediately you will see the loss because of the buying position. If your strike goes to the out of the money, the decay will be faster, since this is the weekly option. So similarly, next day, let me run next day. Next day also the bearish bias, 3 o'clock you are going on the 19th. Okay, let me go to the 19th. See, 19th, let's take the position at, okay, 3 o'clock. 3 o'clock, what is the strike? Okay, 19,650. Okay, go to the option chain. What is the bias? Bearish bias, 19,650. Let's take 19,650. I'm going to buy the same option. Just buy one lot. Okay, what is the maximum loss? Maximum loss we will get 5,800. Okay, the profit will be unlimited. We don't want to get unlimited. Okay, this is hypothetical value. We don't want that. What we are going to do is next day morning 9:30 we are going to close the position. Let us test for a few days, at least 1 week to 10 days. 9:25. Okay, 9:30 we are enough, we are done for the trade. Okay, for 5,000 investment we got the 1900. Okay, similarly if you see, right, nowadays most of the time it is having the trend. Okay, now most of the time it is having the trend. Whenever you see there is no trend, okay, there is no bias, don't go for the trade. Here there is no bias, so no trade. Next day, let's go to the next day. Okay, next day what happened? Next day it closed below, which is the date? October, Monday. Okay, 23rd. Let's go to the 23rd evening. 23rd, three o'clock. 23rd, 3 o'clock. Okay, what is the price? 19,350. Let's go to the 19,350. Okay, just I am buying 98 premium. What is the max loss? 4,920 rupees is the max loss. Okay, what we are going to do is we are going to exit by 9:30 next day. Okay, 1800 by 3 o'clock itself you see the 1800. You can exit now itself in case you are looking for smaller profit. Okay, we need some process and discipline. That's what, either loss or profit we are going to take next day only. Next day 245 rupees we got the, okay, 245 rupees we got it next day morning. Similarly, okay, after that what happened? So this is the, let us take, okay, let us take, this is the bearish bias. This is the bearish bias on what? 26th October. Let's go to the 25th. Okay, 26th October by 3 o'clock. See, this is the 26th October means, okay, what is this? This is the 26th October. We need to go for the next expiry. That next expiry is not there. Okay, the next expiry was not there. So, or we can, you can see here itself, we can see next expiry was not there to simulate. So from year to year, 4-5 days we have tested. Here there could be some loss. Definitely some loss will be there. Okay, let us see. Get the option. Now what we have to do is go to the builder. Okay, here we will not have. Okay, any data we don't have. This is the November 2nd. Okay, next week only we can check this. So this is how, what we can do is we can find out the bias. Whenever we see the bearish bias, buy the PE. Whenever we see the bullish bias, buy the CE. Okay, the maximum loss and maximum profit we can get more than 5,000 sometimes if it is gap down or gap up. Okay, in case the maximum loss, it is limited since we are in the buying side. Okay, that is called bullish bias and bearish bias. Even you can go for the strategy, some strategy, selling the call options, selling the put options. Okay, based on this bias. Okay, that's all guys. I wanted to discuss this topic because what happening is most of the time we don't have the proper setups, how to trade, what to trade. People says follow us, we will give you the adjustments, all those things. But I feel for the less capital people, you can practice like this with the low risk strategy. This is not at all strategy, this is the just bias. Okay, the expectation like tomorrow it may gap down because of the today's move. Okay, because of the today's sentiment, this is the sentiment trade. Most of the time nowadays, if you see, right, the trend, if the trend is there, it will continue for 2-3 days. Maximum the day which is turning from the bearish to bullish, you will see the loss. Continuously 4-5 days you will get the profit. Okay, one day you will lose the 1 or 2 days you will lose the money. So if you see all these places, right, there are some days where you won't even get the trades. Okay, these 4 days, this here, right, these 4 days you will not get the opportunity. Whenever this is the low risk. Okay, here also you won't get the opportunity, here also you don't get the opportunity. Here we can get the opportunity because the close price, right, the close price is below the lowest. Okay, that's all guys. Thank you so much.